Hello, Maverick traders. Welcome out to your market roundup. It is May 13th. Corey here with you. Let's jump in. We always take a look at meaningful news in the markets, what might be moving stocks up, down. We look at sector rotations, and then we're always highlighting our very best bullish, neutral, or bearish trade ideas with different strategies and different opportunities to take advantage of what the market gives us.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's break down what happened today.
So today was kind of a mixed bag. You'll see, Dow was down a little bit, S&P flat, NASDAQ up slightly, but basically a sideways day. Where the movement was in commodities, oil bounced back up 1%, but oil's been in a downtrend. Gold's been in an uptrend, but it pulled back 1%. So this speaks to maybe the risk on, risk off environment. Typically gold is more of a safe haven, it's more of a defensive thing, and it moved lower as equities approached the highs. GameStop was also part of the daily news. That exploded higher, up nearly 100%, and on a mere tweet by Roaring Kitty, the guy that set off the prior GameStop explosion from a few years back. He hadn't sent a message in 3 years, and it comes out, and then the stock explodes. And it just kind of shows you there is not an efficient market at all. One tweet from one individual can move a stock up nearly 100%. Of course, it's not an efficient market in that way. So did GameStop's business double? Of course not, but the stock can. Advanced decline line, about half and half. Roughly, with slightly more stocks advancing at 51%. And then the 20 or the 50 period moving average, we have almost 60% of stocks back above that. Not surprising as the markets have rebounded of late. So as we look at this chart, what do we make of it? So I had mentioned I was bullish a few weeks back and kind of expected a spike above these moving averages, but where do we go from here is ultimately the question, and you can see where the all-time highs were. Couple of things. If the market just kind of pulls back and then works its way back up there again, consolidates, you could form a big cup and handle or something like that could be in play. What I think would actually be more bearish for the markets is if we try to break out too early. Imagine that we come up for another day or two strongly. Imagine you kind of spike above the resistance and it's just a fake out move, and then you plummet right back underneath aggressively. So if that were to happen and you get this fake out move, this shakeout, fake out bullish turn up above resistance, from false moves come fast moves. I actually think that would be more bearish. The more the markets consolidate under here and maybe form a cup and handle and so on, you got to give credit where credit is due. That would be bullish. If you spike in the next couple of sessions, which I don't think is out of the question, and try to break out, but really it's just a fake out move, kind of sucks buyers in, triggers a bunch of stop losses from the short sellers and so forth, and then reverses hard, then I think we get a more aggressive sell-off for a few days, and ultimately probably a little more extended downturn thereafter. So I'm leaning towards thinking that's what's coming, maybe a spike higher over the next couple of sessions coming up. I could be wrong about that, but that's what I'm envisioning is just kind of this false fake move. Now, even with the S&P doing that, the NASDAQ would probably still be shy of its highs, and that's perfectly fine. You could rally along with the S&P a little bit here and then reverse back down. And ultimately, I talked about this in the weekend trading room. I do think that in the coming months, we're going to test some lower prices. But everything in its time and in its season. That doesn't mean that the next few sessions can't be bullish. And if I had to just do something here in the very short term, I would be a buyer. I think there's clearly just the momentum of the short term is to the upside. So without overthinking it, probably get a little bit more spike to the upside here in the near term. The heat map, GE, Meta, I mean, there's some pockets of red. Of course, there's some pockets of green. Tesla, Intel with a bounce back. Intel's been a really, really bearish stock, and it's one that we highlighted as a prospective bearish trade over the weekend. It was gapping up this morning. So whenever you have a big gap in the other direction of what your plan was, you've either got to adjust the strike prices or just move on altogether. And that's a case where I think we could just kind of move on or wait a few days for a better entry point. But mixed bag of bulls and bears. The weekly outlook here, I would move this more towards thinking that maybe we spike up in the very short term for a couple of sessions, which would lean a little bit more in this direction just in the very near term. But ultimately, I mean, it's a mixed picture. You're above the moving averages, but they've got bearish crossovers, 20s below the 50. That's out of place. They're more sloped sideways than up or down, although they're trying to turn upward. You would have to give the technicals more of a bullish reading than anything else, but that doesn't mean it's a clear-cut bull market either. So let's look at some ideas on the bull list. We've got a few different names here, bear list as well. On the bearish side, a little bit more in the healthcare type of space related to that, although Teva is in the healthcare space. So really just kind of a mixed bag of potential prospects. Here's Pinterest on the bullish side. Characteristics, big breakout. This had been in a consolidating kind of downward trend for some time. Huge breakout on volume, and this is really your first pullback. So as you pull back, what you'd like to see is just not much of a give back. Pull back for a couple of days at most, and then start to work your way higher. I think this is one where the bears are trapped, the bulls have control, and I'd expect higher prices to continue to inflict some pain. Now, where I would stop buying is if there was a big exhaustion high. Imagine that you do ramp higher, and then you have this big explosive up day on increased volume or something like that. Then I would be inclined to take profits and feel like the short-term trend has run its course. On the bearish side, here's CVS. You can see it's low basing. Right now, it's in that consolidative phase, but even as it tries to rally, notice how it falls off the highs, the long upper shadows. Now, for now, we're still just stuck in that sideways range, but I think that's telling. Think about how bad it is when you've gapped down from 67 to 57, a $10 drop, and there's not even enough buying pressure to push you up towards the moving averages or even really carry you any higher. I mean, that just speaks to how negative this is and how much selling pressure is still just unloading constantly on this stock. So I suspect there's another leg to the downside out of this low base pattern. And then last but not least, Expedia, similarly, big breakaway gap on volume. This is the first rebound, and I'd expect lower prices to continue to push down. And same thing, but in reverse to the first chart we talked about with Pinterest. The only thing that would make me think this is done going down overall is if you had some sort of downside exhaustion. If we started to plummet and then there was a big drop on heavy volume, that would kind of punctuate the move, suggest that the downtrend is done in the short term, and then it would go through a multi-month correction or consolidation or pullback or something. But along those lines, I just think you play the trend, you play the momentum. This thing is likely to trade lower, not higher in the coming weeks. So markets are approaching that all-time high. Do we break out? I think a false breakout, if it happens in the near term, within the next few days, that we push to a new high, my guess is that that will be a false breakout. If we can consolidate and just kind of rest up here for a couple of weeks, well, then a breakout would be quite powerful. So it depends on how the markets break out. I think if we do it here soon, it'll be that false move, that attempted breakout that really doesn't have the sustained buying pressure that's needed for it to keep climbing and climbing. So that's the playbook as I see it. CPI comes out on Wednesday. That could be a catalyst to get that false breakout moving. Applied Materials, Alibaba, Cisco, Deere, Home Depot, Toyota Motor, Walmart, and many others still reporting earnings, although earnings season is starting to wind down. Just be aware there's still plenty of companies to report. Hope you enjoyed this market roundup. Have a great week, everyone. We'll see you next time.